I'll shoot you all like that scene I wanted you all to do, no, at your house. We'll do it there.
Oh,
It sounds damn weird without context.
what scene are we
Be like
talking
one.
about? What is this? All right, guys, welcome to the Rupeeting podcast. So, just a quick disclaimer: this is not financial advice; it is for entertainment purposes only. So, if you want financial advice, go to rupeeting.com and subscribe to our portfolios. So, without any ado, let's start. This week, under the focus is Nykaa. So it is one of India's favorite startup stocks. It was oversubscribed, I think, 82 times at the time of its listing. But now it's down 65%. And I don't know if you follow the news recently. Top five executives of Nykaa just walked out on it. And yeah, the stock's in focus right now. So let's discuss, is 65% downside enough?
Yeah, top five executives, but like many more investors also. The only happy investors are VCs. After it got listed, it's just been a shit show for everyone.
Absolutely.
Um, but yeah, 65% still doesn't seem like the bottom of it. Um, in absolute terms, obviously 65 sounds like a lot, and all of the tech stocks or favorite startup stocks that got listed during that same time when the markets were up and took advantages of the bull run, all of them are down between 50 and 75% from their IPO or their listing price. So at every point you would have felt 30% lower, 40% lower. You would have felt that it's a good buy, but it's always defied that price and gone further down. And even at 65% lower, Nykaa still, at least for a lot of people, including us, doesn't feel like is a good buy still, and that there could be more downside even from here. And that primarily boils down to, I mean, it's a great business and all of that. It's been able to uh, capture that majority share in the beauty segment, and it's got a great fan following. Right? People really vouch for their products, and they have a loyal customer base which keeps returning to the site no matter what. So they have a great business as such, but I think the discomfort comes from the valuations that it's trading at. And till the time the valuations don't become reasonable enough, it doesn't make sense to hop onto this decline, because it's not like it's not like you're going to catch the bottom. You're instead probably just catching a falling knife at this point. Um, so with Nykaa, I think in terms of valuations, it trades at 8 times EV/EBITDA on a trailing basis, which is more or less the average of what the other Indian tech stocks trade at. But that's not enough to justify it being reasonable or it being inexpensive at this point. It needs to be looked at from other dimensions as well, and more specifically from what's happening in the beauty space. Although there is no comparable in India, there are global competitors to check on and peg Nykaa to. Obviously, there are differences in growth rates and in terms of business model, and that's an obvious. India gets a growth premium, but I think the more important focus when it comes to Nykaa is the difference in business model from some of the platform players, and hence why even the current valuation after the fall doesn't really make sense, and there could be more downside. So, who are the global players around, and what are their valuations like?
Yeah. To understand the comparison, as you said, the Nykaa has a different business model than what it seems to be. So, breaking it down a bit, it operates just like a traditional store. It buys stock from like manufacturer or sellers, and then because it buys in bulk, and there is a people that trust Nykaa that you'll get authentic products rather than duplicates on other sites like Amazon or Flipkart. So they just sell it after buying it. So it's like a traditional model, unlike, let's say, a marketplace model which is there for Amazon or Flipkart or Zomato in that case, where the sellers and buyers meet. uh, what happens in that case is your costs are fixed. Let's say Amazon or Shopify, for that matter, they have set up their servers. If more and more players are transacting on their platform, their costs don't increase that much. But for a Nykaa, let's say if they increase their revenue, their costs will more or less increase in that same fashion, because the gross margins won't change as much even if they increase their scale. So the benefits of scale which these non-linear platforms have, they'll have a lot more revenue streams. Like in case of Zomato, they have delivery fees, they have a commission from restaurant, they also have advertisement from restaurant, they do Zomato Gold also now, so you can find different ways to monetize it. But in case of Nykaa, that is not there. And they might have a marketplace model in fashion or some other segments, but like if we look at the financials, 85% of their net sales value is inventory led. So they'll just buy the product like a traditional soul, put a margin and sell it. So if you look at linear players who do that globally, like ASOS, Zalando, or Boohoo, they are not at all comparable on the EV per sales metric, which is mostly less than one for them. But on EV to EBITDA basis, they trade at around 10 to 20x. Need to keep in mind that their growth is also around 15 to 20% in the last 3 years revenue growth, but Nika's growth is much higher, like around 40%, projecting to be 25% in the next 3 years. So even if we consider that premium, the 158x EV EBITDA on a trailing basis that Nika trades at seems like pretty steep, given we have this understanding of Nika's business model. The margins are not going to drastically increase in the future, and there are some some headwinds as well if we talk about that.
So, sorry, before that, basically, then what you're saying is to sum up that Nykaa is a retailer, whereas the other guys are more tech players,
Yeah.
right? Their primary business is tech, whereas for Nykaa, although it calls itself a tech company and it is tech in terms of where the activity is happening, at
Yeah.
the end of it, वो दुकान ही है.
Yeah.
It is just that it is online. So that's the primary difference. But because of a lack of probably understanding or because of wrongly being compared to the tech guys, its valuations are more comparative or even at a premium to some of the platform guys, right? Shopify is another league altogether. But compared to some of the other guys in the whole retail space, but platform driven, like a Zomato, but retail. Their valuations are pretty high as well, right? But I think this one is more towards them rather than being closer in valuations towards the retailers.
Yeah.
So BPC obviously has been doing well. It has a 85% composition in terms of revenue for Nykaa, and that's the e-tailing business, right? But even there are there and obviously new entrant is fashion, which is more marketplace driven, and that's the one that could deserve a higher valuation. But in any case, even BPC, its bread and butter sort of business, that has some amount of um, threat coming up compared to before, right? There was no competition at least earlier, but now the scenario seems to be changing.
So yeah, as you mentioned, the BPC arena is starting to face a little competition. But when Nykaa entered the market in 2012, it was the only one doing this in the beauty and personal care product space. So how much ever we want to call it just a store, it was the first one to come up with it for this particular segment. So it had that first mover advantage for sure. And that dominance resulted in a lot of ad revenue coming in just towards them. So that funneling, because of them being the only player, eventually led to it being about 10% of all revenues, so which is a big component, of course. But now, since we see that competition coming in with players like Agio, Mintra, or Tata Click Palette, these are just some that are coming now and setting the pavement for others in the future. So that pie is becoming larger. And what that does to ad revenues is basically if a makeup player wants to advertise, now there's many more options compared to just the Nykaa a few years ago. Coupled with that, we mentioned the BPC model or their inventory led model being linear in nature, whereas ad revenue isn't. So it comes and goes, and that non linearity will severely affect their bottom line. And just the contribution that it makes towards overall profits will also be affected. So this competition threat will bring a stoppage to that momentum that it has been facing just because of being the only player.
Yeah, so even profitability wise, like what happens is if they're without enough scale, if they're trading at thin margins of say 1%, 2%, and that also comes at a very large scale, right? Before that, they're usually negative because they have to deal with delivery, fulfillment costs, advertising, marketing, promotion, and returns, and there's so much cost involved that it gets negated only when a certain scale arrives. For Nykaa as well, they've turned EBITDA profitable. However, if you kind of look at the numbers, a lot of that profitability can be attributed to the ad revenue. And that's because they are making so much in advertising, and advertising has no cost, right? There is no bechne mein, you're actually buying stuff and selling stuff after that, and that's why you're quite a thin margin. But advertising is revenue is all passed through. So effectively, if the ad revenue gets hampered and your profitability at this point in time is so heavily dependent on that ad revenue, it's bound to take a hit negatively. But you don't. It's wrong to sort of also come to a point where you're saying that it will take a hit and negatively impact because the space is growing. And Nykaa, even despite being the largest player, is still growing in healthy double digits still, right? So competition as such coming in may slow down the pace when it comes to its path to higher profitability, but won't really take it away from Nykaa. So that's also important to note.
So if we look at the numbers, I think in the 9 months of FY23, the profit was around 185 crores, but the ad revenue made up around 310 crores. So let's say all these players coming in and, let's say you're a beauty advertiser, you even allocate some of the money that you're putting to Nykaa and other players. So even if that 50, 60 crore number goes down in ad revenue, not in absolute terms, so that will have a huge impact in their profit margins, as they're really thin.
Yeah. No, so it'll be two ways, right? I think it'll also be one, the share of revenue or sorry, share of ad spend going from Nykaa to other players. That's obviously one. But given the fact that the other players would also want to make it for advertisers to advertise on their platforms, there could be like a rate battle as well.
Yeah.
So you could, and obviously the smaller guys do have a lower rate because there are lower number of people and all those economics do come into place. But purely competitive driven cuts in ad pricing could also be seen because of heightened competition. And with heightened competition, while we're talking about ad revenue and that being the major component, there's also the fact to remember that whatever the growth may be in the entire online BPC space, that was entirely eaten away by Nykaa so far. But now it has to share it with other people, right? So when you're sharing the pie, obviously you're not going to get that larger piece as you were getting earlier. So there's a and that's a bigger deal than the ad revenue because here your base business momentum itself is going to be diluted because of high intensity competition going ahead. But other than that, I mean, competition is something that is pretty tight across the street, right? And applies for not only their beauty business but also their fashion business, which currently still constitutes to only about 15% of revenue. But that also seems to be a super competitive space, right? More than beauty, in fact.
Exactly. So, like Nykaa, no doubt came to fame from the BPC segment, uh, and its fashion business is still nascent. But the growth levers there also don't seem that favorable. So, as everyone has repeatedly mentioned, the competition, big players coming in deep pockets, it has to share the pie. Nykaa for the fashion business, it's not even EBITDA positive, which I guess is understood. Fashion is cutthroat. They need with the competitive intensity and the high marketing spends and everything. That is still understood. But this thing of customers wanting brick and mortar stores of the big brands and the online retailers they buy it from. Is not that good for Nykaa basically because the brick and mortar stores are lower ROE and they put even more strain on Nykaa's already low margins. So basically, even if Nykaa is making strides on its marketplace model, it's improving greatly, but the profitability is still in question. So yeah, the stock might not do well because it might not become profitable.
We have
Yeah.
to understand the attraction to fashion also. The margins are better in that business. The average order value is also much higher. But Indian consumer is not at all sticky. Even if they get to capture the market, as long as if they are running on EBITDA negative margins, as you said, as long as they try to increase the prices or attach a premium, they'll face a loss of customers. All the promotional spend that they are doing is what is keeping them afloat in the space.
Yeah. So despite it being a tech business now, the marketplace business, where it's just hosting buyers and sellers, and fulfilling orders in the meanwhile. It still turns out to be extremely expensive to do so. It would have been great in some other space, but in this space, it doesn't again make too much sense because there's so much competition. You have to constantly advertise. As you said, customers are not sticky, so the advertising and promotional spends are extremely high in the business, and that comes onto Nika's head because they are the platform. And the other thing being the fulfillment cost itself is also high. Discounts are also massive. So it all comes down to not making money in a business at a profitability level. But there is high growth, but at the same time, no profitability. And this growing pie, despite it becoming 15% now, it may just uh, become a bigger share in terms of revenue later as well. It will continue growing as a percentage of revenue over the next few years. And that should ideally command a higher valuation because it's a platform business, right? But actually, that may not really happen only because the profit margins are so much worse. And although you're getting a higher share, you're sort of diluting your overall financial profitability by getting into this business. So the one tailwind that it could have had is probably also acting as a headwind in this case. So despite higher growth, you may not really become profitable, and I think that's also sort of critical now in the whole listed space, right? With so many startups not doing well. And suddenly, whether it is listed or not listed, every startup or new venture has to lay their eyes onto profitable growth as a metric rather than just user acquisition. So that trend is picking up very fast, and investors are getting a little impatient in terms of profitability, and they want to at least, if not see profitability, at least see a roadmap towards it. And if that is not happening, then that becomes a big problem in terms of a lack of triggers for the stock to start performing well. And investors after listing have learned a hard lesson on all of these stocks. So I think they're going to be very careful in terms of investing here, believing what they say, or having the confidence in strategy and execution, and actually putting their money. And that's what at the end of the day determines the valuation, right? A valuation is how much investors collectively are willing to pay for a stock. And if there is massive loss of confidence and headwinds in the form of existing business, new business, competition, then that re-rating becomes a little more challenging than it can be.
Yeah. And despite the fashion business, Nykaa, as let's say a pure play BPC company, which is online and listed in India, is a really good business. The problem here is with the numbers and how the market views it, and what is the valuation that should be ascribed to it. So I think the valuation we did comes to a price of around 100 rupees, which is 3.7x EV sales and 43x EV EBITDA based on its FY25 numbers. So this takes into account the platform point as we discussed, and we have modeled a 25% revenue CAGR with a 50% EBITDA CAGR, which are conservative estimates for the next 2 years. And there is room for downside with this number, right? So this is around 30% discount from current levels, and all the potential profitability that goes away with fashion or other businesses, and the competitive intensity that is going to be there, this takes into consideration. So, and one point I think I'd like to discuss, which really put like a bad view of the stock and investors, was the bonus issue that they did for the lock-in period investors. So briefly, I'll explain that what happened was, after the IPO, there is certain lock-in period for certain investors, right? A 1 year period. So they are not able to sell those shares. But what Nykaa did was did a bonus issue. What that does is indirectly makes the investors have to hold it for a longer period due to tax implications, and uh, laws by the, like, you'll wait for the bonus issue, right? If you are holding those shares, that, so that is why we see the stock at around 30% discount on current levels, but it being a good company.
Good company, but cheap moves.
Yeah.
Yeah, but that didn't leave like too much of a good taste in investors because people looking to exit would have been sort of forced to stick down to Nykaa just by this one move.
Yeah.
Um, but yeah, I think corporate governance issues are everywhere in the startup, listed startup space. Uh, Everyone can name at least one issue with all the listed companies out there. Sometimes multiple with someone like a Paytm. Uh, but yeah. So yeah, even at $100, then it becomes a little more reasonable to buy, right?
Yeah.
Because then you've also got a place where it's trading at like a 45 times EV/EBITDA, but even the growth is sort of 50%. So growth and valuations are going hand in hand at that point in time, versus right now where the valuations still seem a little absurdly high. Um, and has room to come down. But I wonder how no one did this analysis or did think of it when the IPO was coming. The stock was obviously priced so much higher compared to now, because it's already fallen 65%. So um, either people were smoking something or
I
uh,
think the market momentum was really there because there was this jubilation that all these tech stocks, not a lot of tech stocks, other than, let's say, InfoEdge or that's Naukri, were not listed in India. So all of these coming at once, people were excited and didn't really care to look at the numbers. Or even if they did, I mean, the bull run just ignored that. But this first batch has been relatively good, I think. When tech IPOs start coming again next time, maybe we'll do a better job at analyzing them.
yeah, no, but also yeah, true. Depends on the market, right? Because when you're making money at in everything, um, your tolerance towards one investment going bad is or one investment being at risk is much higher compared to a time when everything is not making money. So investors are generally more forgiving of um, growth not coming in or valuations looking high or whatever. There is demand, stock looks sexy, everybody's happy, news में आ रहा है, सब अच्छा चल रहा है. So you hop onto it. But yeah, bad times like these when it teaches, not pays. It costs.
Yeah. Like, speaking of recent IPOs, I think
No, sorry, which tech stock would you buy though right now if you had to buy one out
I
of the listed ones?
my bet would be Zomato. Uh, Although Paytm re-rating has happened because the market understands its loan book is not its own and it won't face NPA losses, but the Zomato growth story is really good. With I also believe in Blinkit, the network effect and population density in India. So there is a room to make money in
But
Paytm.
there is one second, Blinkit again. There are so many players coming in. There is
Yeah,
Dunzo, Zepto,
but
Swiggy,
in
and
recent
that's what's happened everywhere globally. Initially, everything looks great because density, population, whatever you said right now, those
that's not there
buzzwords,
globally,
and
but
then and then like 15 other players come into the picture, and then they die or they don't make money.
No, but few weeks back, some news was there, right? Dunzo is running out of money. They closed a lot of dark stores, and then other players also. But Zomato has the deep pockets to sustain this Blinkit experiment. So my bet is on that.
But for
This
how long
competition.
is the question? No.
No, but they have a lot of cash on hand, right? These VC players are not putting a lot of money in these businesses, and I don't know. This winter is does not seem to go away very soon. But Zomato can be the daddy hand of the quick delivery space.
What is your bet on Ayush?
I was thinking Paytm as well because we've already covered why it won't be a good bet. But seems like they might be turning a new leaf in comparison to the other tech
In
IPOs.
what? What are they doing?
What are they doing differently? I think the
No,
whole
what are they doing that will drive anything for them? सब में तो फेल होता है. Gaming चालू किया fail,
yeah, of
shopping
course,
चालू किया fail,
yeah, that's true,
broking चालू किया broking में किसी का पैसा नहीं बनता discount broking में.
correct,
Where will they make money is the question.
And Paytm actually has deep pocketed competitors
yeah,
like Google and PhonePe wala. Like
Who don't even have to care about listing, right? They're like, हाँ ठीक है. We don't have to answer to anybody. We'll continue our VC game. इसने इसको चिपकाया इस वैल्यूएशन पे आ गया पैसा. Who is Zomato? Sorry, Paytm gonna चिपका it to now.
that's true. Hardik, what about you, man?
I don't know. Last time I checked, I think InfoEdge, Naukri.com, I think.
that's the old. That's an old player.
Yeah,
What are the new players except like
what do you all
Paytm?
think about Policy Bazaar?
Yeah, that could be interesting, given the shift to like IRDS push towards digital insurance.
Digital insurance, yeah.
Yeah, a lot of information on that.
I think the new platform that we had discussed earlier, which I seem to love, Policy Bazaar will have a significant sway over there too.
Yeah.
Insurance is always a tough place to understand. Plus digital, so it's a nightmare.
Yeah,
But
My bet is on India Mart.
why is that?
I like it यार. Platform है, तुम लोग बेचो, तुम लोग खरीदो, मैं बैठेगा पैसा कमाएगा.
It's India ka Alibaba kind of.
yeah,
It is quite aggressive in its selling tactics and all, like
that's
just dial in the old days.
Everybody is na. This thing. Put your number on Policy Bazaar. See how many calls you get.
oh lord, it's
Oh,
terrible.
what?
But policy, whether how much money they'll take from you, na? India Mart is like, I'll give you 10 leads, keep giving me money, keep giving me money.
Yeah. और वो तो B2B में माल पड़ा है बना हुआ बेचना है उसको.
Exactly.
वो तो मतलब that buyer will be like, हाँ तू ले पैसा if you're giving me leads.
Yeah.
I also like the business. I think it's very beautiful.
Cash cow.
Like discussing other stocks that have IPO'd other than tech, maybe. What is something you guys like? Since we see.
Mine comes to mind.
What about Sula Vineyards? You know, it's.
That's
I think it's in the alcoholic beverage segment. Company from Nashik IPO'd a few months back, and it's relatively small. I think around 3,000 crore in market cap, but there seems to be a bit of buzz around it. And although wine market is really small, this is the player to go. I mean, some of the drinkers can maybe tell us about it.
Sorry.
Let's go, Ayush.
Sorry,
Why
Ayush.
me? No, but I think
Take your image on the podcast.
it's been up, I think, what, 15% since listing as of now, right? At what, 360 right now price.
Yeah.
So
So crazy.
that's interesting to see how much more upside it has left in the short term, at least. Because summer entails a lot of wine drinking, I'm assuming.
What? Why?
I don't know.
You think India is so like fancy that everybody's making like sangrias for summer. Everybody's chilling in their lawns.
All these Nykaa influencers definitely seem to be leading that life. So
Sula makes good wine. I like it. So
Yeah. That is our investing rationale.
I would actually do the Bira IPO also. I would like. Matlab, I would
Hmm.
invest.
Oh, when is that?
Bira,
When is that again?
I don't know.
अच्छा ये अच्छा ये makes sense.
Well, I mean, they've been talking of listing for a while, so that seems like a very promising space to be in, including wine as well. Obviously, no one's drinking those sangrias right now, but at some point, everybody will be, hopefully.
Right.
Not hopefully.
Hopefully.
I think Bira has their DRHP file, right? No.
Does it?
Hmm.
A lot of these companies are stuck in the pipeline, Oyo, and what is the other one? Payments player.
they are afraid to IPO. I think with the current market conditions,
And
everyone
nobody's
is
willing to
not.
buy right now.
Uh,
Mobi Quick, yeah.
Won't be quick.
cool. So next week we are doing Sula.
Yeah.
Yash
Cheers
is
to
having good
that.
honors.
Yeah. That's a wrap, guys.